Guess what? I didn't set that sale. But hey, that's more reason why sometimes I still have that question I'm asking myself. So, David, must you wait for the confirmation? Because look at this. Waiting for the confirmation means you're gonna wait for this. And that's like that's like 140 pips out of the whole 240 pips. That's like more than half of the whole meaningful movement of the market. And then while this happened, you were waiting for retracement patiently, like we literally often do. And this is something that worries me when it comes to, you know, waiting for confirmation when it comes to execution as a trader. No, please don't be emotional about what I'm saying. We often as traders fall into this loop. I'm a would I say victim? I always find myself in doing this right now. So waiting for confirmation might be good, but at other times it's just not the way to win the markets. Because after all said and done, even when you wait for confirmation, that does not guarantee that you might not hit stop loss. Now, waiting for the retracement, I would naturally be waiting for a sell around this point. Optimum point of entry for me. But the market didn't come there. In fact, the subsequent candle, if I had entered, dropped another 100 and maybe 46 points or pips. So now I'm being pious. I'm going to wait for the retracement. It doesn't work that once you have a key level that you have a likely point of trigger for the market, the best we can do is enter at that exact point. I mean, so this was my trigger point, 4,795 to 4,800. I should have just entered once I had liquidity above this point, and I should have just entered. So targeting the high of this particular point should have been my point of entry, which is grabbing liquidity. I could have just done that. I think that's the only trap that's the only way I could actually take advantage of the market. So, because if you look at the daily time frame, which is what I want to show you right now, you would see that what the market literally did was the market went for the liquidity rest on the previous day. So I could have just said, you know what, I'm going to target this previous day at 4,943 above it, right, like that. With my stop loss right anywhere above this point, I'm just going to risk it, or maybe above here, like the candle wick, which is the candle wick of the other move. I'm going to say, yes, that's my point of stop loss. I would, by so doing, get myself in the move with a very free and allowable stop loss. And I'm going to probably run this. And by morning, I'm going to be waking up to a magic. But that's just to say, it's not every time we wait for confirmation. At other times, take the liquidity rest above the previous candle, as you could see in this scenario. So you literally get to do this, and you wouldn't miss out on trade. So you get to rise. Take your trade rise above here, something like that. Exactly. So with this, you are always in.